Hello there, and welcome to the Weekly Outlook. The events on the calendar next week are, there's not that many. We have got the non-farm employment change at the end of the week, but until then, Monday certainly is very, very quiet. Then moving through to Tuesday, we've got the RBA rate statement for the Australian dollar, manufacturing PMI, GDP month on month on the Canadian, um, the dairy index on New Zealand dollar, ISM manufacturing index for the US. We've also got GDP on quarter on the Aussie dollar on Wednesday, and then there's various little alerts here and there. So, first of all, let's have a look. Let's discuss the prelim GDP that came in on Friday for the US dollar, which was quite a bit higher than expected, which caused a bit of a rally in the US dollar. And you can see the dollar index here did start to rally up quite a bit on Friday. Most major currencies are weakened against the US dollar, the Australian dollar here, the euro, the pound, the US dollar, the Japanese yen. One of the things that the New Zealand dollar, the one that was significantly against the grain was the US dollar Canadian. The Canadian dollar still showing a fair bit of strength there at the moment, possibly due, or well, more than likely due to the recovery in oil that we had at the end of the week. But as you can see in the oil price here, if I just make that chart big, you can see where the how this big rejection ended on the daily chart on Friday, with this big pin bar here. Looks to be like sellers are coming back into the market on oil at the 34.50 area, and it started to push down. So that is quite interesting to see whether that's going to affect this Canadian dollar strength at the moment. Certainly with the fact that we had that such a good prelim GDP coming from the US dollar side of things, really this should be showing some signs of turning around. At the moment, it's not, so we've got to wait for those to materialise. There is a strong support at the 134 area, so we can wait to see if that's the instigator there, and if we get a pin bar rejection from that price. The other thing, though, what I do want to make you aware of with the US dollar Canadian chart at the moment is on the monthly chart. Now I know this is quite a big time frame, but you can see here we've got a huge telltale signal that this is on the downside in the long term. You can see here that we've got this huge pin bar rejection on the monthly from 14653. And obviously an engulfing candle here as well, which is taking over now. In terms of entering this for a sell, I would like to try. I would always try and get in on the pullback of the next candle, which would bring it, round about to the 738 level, which is about 300 pips away from where it is at the moment. So I'm not suggesting that we jump in for a sell straight away, but certainly to be aware that a 50% pullback on this candle could be apparent, and now that could be instigated at the start of the week with that falling oil price, or that oil price at the moment. So we'll see how that develops. Now, okay, let's go back to the calendar and see what we've got. The Australian dollar started to fall again on Friday after that good prelim GDP from the US. Not too sure how much further this will fall. The Australian economy isn't too bad at the moment, but we did have some weak data out last week, and it was rejected, or resistance was found around the 7250 level. We have got a rising trend line on this from way down here, which is just retesting at the moment. So until we kind of break through that, really, it's hard to see if this is going to rebound from this price or whether it's going to continue down. Now, again, commodity linked, so if oil keeps to fall, then the Aussie dollar could very well follow in tow. Certainly, if it breaks below the 7.1 area, then I think we'll be looking to retest the 7,000. The RBA rate statement itself, I'm not really particularly expecting too much from that on Tuesday. I think we're more likely to see some rhetoric in the rate statement itself, which is probably going to be involve the RBA talking the currency down. They did so in their last. I think it was Stevens did say that the currency was overvalued, and they'd be more comfortable with it down at 66, 6,600, okay, or 66 cents to the dollar. So there's still quite a way to fall. As you can see, that price is way down here, making a new low from the previous low of 6.8. Okay, so it has got a bit to fall before it gets there. But at the moment, the US dollar data is providing with that downside that the RBA want to see. So I don't expect to see any rate change from them on Tuesday. And the manufacturing PMI on the pound, not expecting too much from that. It is expected to come in slightly weaker. The pound is on the downside at the moment due to this referendum regarding the UK and the EU, whether we're going to leave the EU or not. It is a sell at the moment. I'm still looking for a decent pullback. I was looking for this pullback here initially for the 142.50, but it didn't materialise. But I am looking for something similar now. We've had a pullback here to the 14036. And it has now made a new low. So really, we could be looking at just a small pullback to the 139 area, which is a breakout of the previous support, and then looking to sell that down to slightly lower levels. But this area at the moment, this 1.4 area, this was my original floor for the pound. So I wouldn't be surprised to see it consolidate around this area. It may be that we get some data coming over the weekend regarding, or the public poll regarding whether we stay in the EU or whether we leave, and that could very well cause the pound to rally slightly. If we end up staying in the EU, then the pound is very likely to rally back up to the 1.6 area, which is quite some distance. The UK economy isn't actually that bad at the moment. It is just being weighed upon by this referendum at the moment. Okay, so GDP on the Canadian dollar is expected to come in weaker on Tuesday as well. That could be another reason why, or the start of that rally, as I discussed earlier. And then moving through to Wednesday, we've got GDP on the Australian dollar. That is also expected to come in weaker. So again, we could see that further downside materialise in that Aussie dollar there as it breaks through that trend line moving through to Wednesday. Crude oil inventories due out at the moment. It's very sort of fickle to how that affects the Aussie dollar, to how it affects the oil price. But we will be keeping an eye on it. We've got construction PMI on Wednesday on the pound as well. Not expecting that to affect the market too much. Again, the referendum is the major event that's driving the pound at the moment. Services PMI on the pound on Thursday. Again, same situation. Not really expecting that to show any signs of market volatility. On Thursday, we got ISM non-manufacturing PMI at 3 o'clock. This is actually expected to drop slightly on in the US to 53.5 to 49.8. Now 49.8 is actually contractionary territory. Now the data does seem to be holding its own in the US, and it does seem to be surprising. So I don't think we necessarily need to beat the previous figure of 53.4, but I think if we stay above the 50 level, then we should see some further upside in the US dollar. If it does drop below the 49 and 0.8 below the expected, then we'll probably see a halt to this to this downside at the moment until the Friday when we get the non-farm payroll figures out. Now, at the moment, non-farm payroll did drop to 151k in the last meeting, but the average hourly earnings were boosted massively to 0.5%. So it's going to be interesting to see how these come out together and how the market reacts. It does react differently to the different types of data. Last average hourly earnings was became the key focus of traders at zero point 0.5, even though the non-farm payroll figure dropped to 151. The non-farm payroll figure this time is expected to rise to 195. If it reaches above 200k, then we're almost certainly going to see strength in the US dollar. And if that non-farm that average hourly earnings figure, beats 0.2, then we're certainly going to see that US dollar rally again. Overall, I'm looking for further downside in the euro, further downside in the Aussie dollar, further downside in the pound. I'm looking for this US dollar Japanese yen to continue to rally here, back up to the 116, the 117 area, where I'm going to be looking to resell it. But at the moment, still looking for a rally there with the US dollar strength, and the Japanese yen starting to weaken now, which is what the BOJ, the Bank of Japan, want to see. I'm also looking for further downside New Zealand dollar. I've got an overall target on the New Zealand dollar of about 60 cents to the US dollar, which is over 600 pips away, which is way down here. So that hopefully will start to materialise. We have had some big pullbacks in this, and we're just going to have to see how it pans out over the next few days. But as you can see here, technically we have got quite a big trend line, which it's been sticking to rigorously recently. So very similar to the Australian dollar. It could very well reject at this point and rally again. So we'll just have to see how these key levels play out in the beginning of next week, and take it from there. Okay, thanks for watching, and I hope you can make some pips.